next words you want to get familiar with is PIPS. So you have point, pip, and pipette. So we'll start with pip. A pip is a change in a currency by 0.0001. Okay, so it's the fourth decimal place here. So when you're looking at currencies, I'm going to pull up a chart here. We're going to go over charting later, so I'm not going to explain any of it here. But you'll see that something like this, let's say I'll go USD CAD. Okay, you'll see something like this here. The last executed trade is at 1.33916. It's not just $1.33. We're going more than that. We're being very precise because you can buy something at a very precise point. You're not going to buy something USD CAD at $1.33 and then wait until it goes to $1.40 because currencies don't move as much. You'll see that this is, well, this is a daily chart, but we'll go into that later. Currencies move often just few cents, less than that. Sometimes they stay within, a 1 cent range for months. Okay. So what you're trading is sometimes smaller movements. So we go into several decimal places. So you'll see here, even when you're looking at the last price, that you have the USD CAD at 1.3391. So this one here is a pip. So if it goes from 1.3391 to 1.3392, then it went up by 1 pip. If it goes from 1.3391 down to 1.3381, then it went down by 10 pips, right? Because this one here is a 1 pip. Here, let's say, if this goes up from 0.6685 to 0.6687, then it went up by 2 pips. So from 5 to 7. So this is a pip, okay? Now, we became so precise now that we've actually also added something else. We've added a pipette, which is 5 decimal places down, so 0.00001. So we're even more precise. So you'll see here this small 6 here, that's a pipette, right? So if this currency goes from 1.33916 to 33918, then it went up by 2 pipettes, right? Usually we're going to be talking in terms of pips, right? So this is going to be the thing that you're going to hear most often, and there's lots of reason for that. Even when you're calculating how much position you're buying or profits and losses, we're always going to be talking in pips. Hey, I'm buying this and I'm trying to make 50 pips on it. I'm trying to make 40 pips, and in your head, we'll do the math later, that if you make 50 pips, you'll make this amount of dollars, or you'll make this amount of dollars. You'll also know how much money you're making per pip. So if it moves up 10 pips, you're making 10 more times the money that you've calculated. And then a point is just the minimum change. So for different currencies, well, most of them now are going to be in pipettes. So the minimum change is going to be in pipettes, but we call that a point. But the one that you really want to remember is pip. Next word to get familiar with is lots. So a lot is the standard measure of units, okay, when you're trading currencies. And a lot, which is a standard lot, okay? But whenever we're talking about a lot, we're talking about the standard lots. A standard lot, so when you're buying one lot, you're buying 100,000 units of the base currency. So if I'm looking at USD CAD, well, here, USD CAD that we just looked at, what this means is I want to buy $100,000 of this currency, but I want to pay 100,000 US dollars. Okay, I'm putting in 100,000 US dollars. Now, how much will it cost me in Canadian is going to be more, because a Canadian dollar is 1.33 for each 1 US dollar. So it'll cost me 133,000 Canadian dollars. But remember, we're always talking a lot is in the base currency. We're putting that amount of money in. So if you're buying any currency, we're saying one lot, meaning you're going to buy for an amount worth $100,000 of the base currency. Now, you might say, wait, I don't have $100,000 to trade with. How come one single lot is $100,000? Well, don't worry about it. I'm not expecting you to have $100,000 to trade with or anything near to that, especially if you're starting off. You want to start off with a very small amount of money or even just paper trading, which we'll talk about later. But your broker is going to be lending you a lot of the money that you're going to be trading with. So nobody trades Forex with their capital. They borrow money from their broker to trade. And the reason for that is that currencies move by small amounts, right? So if we talk again about, let's say, USD CAD, well, if you have $100, let's say, and you buy USD CAD, and there's a move that happens, and it goes from $1.33 to $1.34, which a cent move is a big move in currencies. Well, how much are you going to make? You're going to make $1, and that's on a big move, okay? So you're not going to trade with $100. You're actually going to trade with way bigger amounts. So you're going to put that $100 at your brokers, and your broker will tell you, well, we'll let you trade with 100,000. We'll loan you the rest of the money. So even if the currencies move a bit, you'll make way more money. But if it moves against you, you'll lose way more money. But that's what we call leverage, and we're talking about that in another lecture. I just want to comfort you in knowing that, when we're talking about big amounts of money like that, even though you will be trading big amounts of money, you're not putting it up. You're putting a fraction of it up, and we'll talk about that later. But this is going to be your standard lot, 100,000. Then some brokers started introducing mini lots, right? So mini lots, so you trade with smaller amounts. So it's 10, and this has been there for a long time, mini lots, 10,000 units of the base currency. But something more recent was the micro lot, okay? And the micro lot was just 1,000 units, which is extremely small, okay? So one lot is going to be this, 0.1 lot is going to be this, which is the mini lot, 0.01 lot is going to be the micro lot, which is going to be this. So we've looked at what pips are, and we've looked at what a lot is. Now, the next thing that you need to learn is pip value. Pip value is composed of pips and lots. So that's why we had to view these two first to be able to calculate the pip value. Now, pip value calculation is basically you saying, well, how much am I going to make in dollars, in money, for each pip movement that this currency makes? So every pip that it moves up or down, how much am I winning or losing? For example, let's say you have USD CAD. So this is the current price of USD CAD. Now, how much would it cost us to get one lot of this? Well, we know that one lot, okay, one lot here, is going to be 100,000 of the base currency, which is USD, times 1.35251 is going to give you 135,251 Canadian dollars. That's the contract value. That's how much it's going to cost us to get this one lot, right? And don't worry, we're going to talk about leverage in the next lecture, so you'll know that it's not going to cost you that much. Now, the pip value is the profit that you're going to make for each one pip movement. So what's one pip? We know that a pip is 1, 2, 3, 4 decimal places after the zero. So it's 1 here, right? So that's a one pip movement. So we want to know what happens if the price goes to 6 here instead of 5, okay? So instead of having 5, it goes to 6, or it goes down to 4. It moves by 1 pip. Well, let's see, what would be the contract value if the price went up by 1 pip? So to 1.35261. Well, the contract value would be 100,000 US times 1.35261, which gives us $135,261. Now, the pip value, so in this case, if this currency moves up by 1 pip, how much money would we have made? Well, we would have made 135,261, the price at which we're selling, minus the price at which we bought at, 135,251, we would make $10, okay, $10 in Canadian. Now, if you want to know how much you made in the base currency in USD, well, all you would have to do is do the $10 divided by the exchange rate, which in this case, it would have given you 739 in US, okay? Now, when we're talking about PIP value, it is usually calculated, well, it is calculated in quote currency. So when we're talking about PIP value, you're usually talking about quote currency. But if you want to look at it in the other currency, you can do that. The value of the PIP is going to be based on how many lots, right? So in this case, I calculated that you bought one lot. But imagine you didn't buy one lot and you bought 0.1 lot, right? Because you didn't want to spend 100,000 US, you want to spend 10,000 US, right? Well, in this case, what would have been your PIP value? It would have been 10 times less this. So it would have been $1, your PIP value. If you wanted to trade 0.01 lots, okay, so 100th of a lot, meaning you just wanted to trade in 1,000 increments, well, what would have been your PIP value? Well, 10 times less than this one, so it would have been 10 cents, right? That would have been your PIP value. So the PIP value is going to depend really on the lots, the size of the lot that you're using. Are you trading 0.1 lot, 1 lot, 10 lots, 100 lots, 2 lots, 2.5 lots? It depends, right? But based on the lot that you're using, you're going to be able to know that, okay, well, each PIP that this currency moves, I'm making $200 or I'm making 75 cents. So that way, when you're going to be looking at prices, and I'm going to pull something up here. Let's say you're looking at USD CAD, and again, we'll look over charting soon. You'll know that, okay, well, look, if I'm doing one lot, I'm making $10 per PIP. You know that if the price goes, let's say, from here all the way up to, or let's say from where it's at now, 33408, and it goes to, I don't know, let's say 628. Well, you can calculate that the difference between those two prices is 22 pips. So you'll be able to say, okay, well, 22 pips times, $10 per pip, I'm making $220 if it goes from here to here. And because of this, you'll be able to, calculate how much profits you can make or how much you're willing to lose. And we'll be able to use that for other calculations as well that we're going to get to later on. But, this is the calculation. Now, a way to do this is very easy. There's a simple formula to calculate this. And the PIP value, you can, conclude that it would be the lots, how many lots you're using, times 10. So that's the simple version of the calculation. So if you're trading whatever you're trading, you can say, well, okay, if I'm trading one lot, well, one lot times $10 is going to give me $10. That's the PIP value. If you're trading, like we said here, 0.1 lots, well, you would do 0.1 times $10, and then this gives you $1, right? The same calculation that we came earlier with. If you were trading, 0.01 lots, you do that times 10, and that gives you the 10 cents we calculated earlier here, right? So this is a simplification of the formula, so you can just use that if you want. But later on, I will be giving you an Excel sheet that does all of these calculations for you. But I still want you to learn them. I still want you in the beginning to use a calculator and to test it out. Now we're just looking over all these, terms, but we're going to be using all of them at one point later on in the course. So don't be overwhelmed. And I'll see you guys in the next lecture.